Hi everybody. Not sure why, but my camera is way off. There? It's like I'm looking at the camera right now, but it's just not there. Okay. How's everybody doing? I see three here. You're a little early. Just trying to see why my camera setting is all over the place right now. Maybe I need to invest in a company that knows how to find me. It's like if I'm looking at straight at the camera, it's looking like 2 inches away. Anyway, how's everybody doing tonight? Hopefully everyone's going well. Been a pretty interesting week in the market. Markets all over the place. Depending on the stocks you have, you might have done decently well, or you might have got pretty wrecked. Speaking of wrecked, I have RKT. I know it's not the best position I've ever had in my life. I actually got assigned on that thing, and cost basis was a little over 22. We're looking at 18. So let's go over that first. If anyone has any specific questions, leave them in the chat, and I'll get to them once I go over just some of my positions from this week, looking at possible positions for next week, and again, just leave them at any time. I'm going to get to the window capture screen in 1 second. Still trying to learn all this new technological advances of life here. Okay. So in orange are the trades that I made this week. Some of them I'm going to change the color afterwards just to show where the position was closed. Fairly busy week, especially on Monday 503, and then quite a bit the last 2 days as well. So Monday, CCIV, I was finally assigned on that from the week before, and cost basis on that was about 22 or so. Yep, cost basis was 21.95. I do have 200 shares of it, however. So since my cost base was $21.95, I did a strike price of 24 initially. So if it happened to hit 24, would have made a decent gain on that. Premium $50, so we're looking at almost 2% for a week, 2.08. And I was able to buy to close it at 30 because the stock continued to go down because CCIV doesn't know how to stay up. $20 quick profit. I went back to CCIV literally the same day. Strike price 24 again, but I changed my expiration another week out to make $85 premium. Then the stock really tumbled. Bought to close at 34 about 2 days later for a $51 profit. It was literally the next day, 504. I went out another week to 521, strike price 23. Made a $96 premium there, which is good, and I'm still above my cost basis. But about to close at 54, another $42 premium. So at least I'm collecting some premiums on this downturn. Right now, CCIV is in the teens, 1928. From 21, looked like it was going to stay near the mid-20s. They had initial news on Apple, possibly working with them. Didn't really last long. But selling premiums, especially when they have these downturns here, trying to collect premiums, trying to lower my cost basis. Okay, PLTR is a very similar situation. I was assigned at $23.50 about a month ago. I actually bought right this. That was my cost basis initially, $23.50. And if you check last week's video, I did go over the numbers on that. So my cost basis is around 21 or so. Did an initial one for the week at same strike price, 26 bucks. Bought to close it for 7 because it started to drop. Made 19 on that. I only have one position on PLTR, not two. CCIV was 2, by the way, so you could double all those numbers for 200 shares. Then I did another one for 504 the next day. Brought it out to 521. Made my strike price slightly higher at 24. $54 premium. Let's close at 38. And the reason why I did that, I was getting a little reluctant, so I went out all the way to June. Cost basis is actually 1981, the year I was born. That must be good luck, right? But I did change my cost basis here when I did another one for a $69 premium. Went down to 23, so 50 cents lower than the initial buy right purchase price for $69, and I'm currently in that one. This is a good trade from one of our Patreon members. Definitely appreciate offering this one. This was a buy right for the MPEG. I don't even remember, honestly, but it was a ex-dividend that was coming up on Wednesday. 506. I'm going to look up the stock, by the way. So 506 was the ex-dividend, I think. We're looking at 503 here. Went out to 521, but the dividend was coming before. It was essentially a dividend capture strategy here. And we did sell a strike 10 cents lower than the current price, but there's a $45 premium on it. Ends up being a 4.19% gain if the stock didn't move at all because of the high dividend. I was able to actually get early assigned on this, so I made 1.3% on it in 2 days. Again, I wrote 0.6875 dividend, so pretty high dividend coming on that Wednesday, which actually caused the early assignment. It is one second, MPLX. It's actually a MLP, Master Limited Partnership. Stock went up quite a bit right after the news. So I started it 27.10. Would have been better just keeping the shares, honestly, but I'm not going to complain about 1.3% in 2 days. It's a good return. Around here, again, I got assigned. Someone took my covered call to get the dividend because the dividend was 68 and change on Wednesday. And I don't have to do any reporting of the K12s, which is always a little bit annoying. I'm not going to be that high anyway to have to report it on a Roth IRA, but still a good return, 1.3%. And thanks for Phil for that Patreon recommendation there. Any of you guys that might be interested in Patreon, we do this in every day. I give two trades a day. I also post on the Discord every time I make a trade exactly these numbers, so some of my Patreon members could follow us in real time. Okay. Let's see. I have more money than you. Hope you make millions sharing in your time. You probably do have more money than me, but if you're hoping that I make millions and you have more money than me, then you're probably making billions. So I guess we could both do well on that. Thanks for commenting. UXIN was a cash secured put. These are the rest of our cash secured puts, by the way. 521 from 503. The stock was at 302, and now it's hovering around 2.8 or so. Strike price is 2, so a very big cushion from 302 to 2 in 3 weeks. $104 premium total out of the 9 positions, so we're looking at about 11 cents per position. But if you do 11 divided by 2, it ended up being about a 6.2% gain on average. Some were higher than that, some were lower, because I actually added to this position midweek. I did sell 2 to test out the waters to see what it might give, and I was able to buy to close one at 8 and one at 10. So I'm going to hold on to the other 7 until expiration. USIN again 2.83, still has a big cushion against it to get down to 2 in 2 weeks. The IV is very high on it, but I don't think it's going to get down to 2. QFIN, another Asian company, 521. 25.29 is the stock price, went down to 22.50. Pretty good cushion there. $90 premium, looking good all around. I put an open order to buy to close at a 15. So looking for a pretty quick return that I could hopefully get out early. It did make a 17% move before 505 to 517. So that's the percent of the money, which is a pretty good cushion for a relatively high IV stock. UVXY is for the VIG pretty much, which is looking at volatility. The VIX, not VIG. Looking at implied volatility. I initially did get assigned at 7, but it dropped a lot to 4. I made a cash put at 6. I'm sorry, covered call at 6. $55 premium in a month and 2 weeks. This thing does decay though. It's almost like a hedge to see if my insurance will, or my other positions will do good or not. Because if they do really bad, then at least this will do well. $55 premium off 6 is still relatively good. XOSL, another cash secured put. This is from an ETF that does semiconductors. This is a quick trade. I'm going to go back to it at some point soon. Triple leverage though, so you got to be careful with it. And hovered from 37 down to 36s right now. It was 34.08 when I made the trade for a strike at 28, about 2.5 week, $57 premium. So 2% in a little over 2 weeks. I'll take it. It went up today on Friday, so we were able to take the difference, buy to close at 27, made essentially 1% in a day on this trade too. Okay. Raj says, can you give some insights how you pick your tickers, strikes, expirations? Yes, I will. Let me go over these first. One of the main reasons why I do all these is so you could kind of see the methodology that I'm giving. Date sold, expiration, so I can see the time. The deltas are definitely one to consider. Look for high implied volatility, and I'll show you different resources on that as well. The ones I did today, 507, VIPS and TNA. VIPS, another Chinese company. Chinese companies are paying a lot of implied volatility here, and there's a lot of downside. 28.56, this one's actually not as high in the IV. Strike price 56, so that's relatively close, but $45 premium. We do 45 divided by 26. Looking at 1.7% return in about 2 weeks, so I don't mind that. The delta was only 0.2. This was a trade that I actually gave to Patreon members today. TNA, pretty steady player here. I initially had a monthly on TNA. So 604. The implied volatility is relatively stable compared to the other positions I give, but the expiration on this one was just too far out. There was literally 2 open interest orders for this, and then I was just going to cut my slight gain. I didn't actually lose on it. So this was a week ago. $455 premium. Sold, bought back for $430. $25 per gain. But the reason why I did it is so I could have the money available to do another one that's weekly. Let's look at TNA. And it's triple leveraged. So the IVs are higher. Small cap implied volatility is going to be high. 90.08. It actually shot up quite a bit. I made the trade around lunchtime, so it was in around 93 or so. Yeah, pretty much right at 94. All the way down to 85, so a $9 difference in strikes here. And $85 premium, exactly 1% in a week if it doesn't hit. First, last rights, what are your thoughts on SPGL, QQJ? Let's look at those real quick. SPGL. Stock or ETFs, probably one or the other. Maybe an ETF? Okay, just the common spider 500. The implied volatility will be lower than the triple leveraged. I think I spelled it wrong. SPGL. Is that an ad? Let's look at Stock Option Channel, see what comes up. Yeah, first, last, if you want to give me the right ticket symbol, I don't know if they have that one. QQQJ. Next generation 100, so probably looking at the higher tech fields. So 31.95 is the strike. 31 is paying 0.5%. The delta is 0.23. It's not necessarily a great trade in terms of the premium you're receiving off it. So 2 weeks to get 0.65 is not something that I particularly look for. If you want the position, can't hurt to start with this, at least get a little bit of downside protection. You might buy a little bit cheaper. But if you want to go for a little bit safer, more conservative play, that might be a good way to go. Let's look at SPLG. All right, this looks like just an S&P 500. That's probably a little cheaper than SPY. 49.64. For people with big accounts that want relatively conservative positions, these are usually good to go with. Let's double check if these numbers are right. If you go to 49, you're getting 0.41%. And that's pretty much at the money within 60 cents. If you go at the money, then you're getting your percent in 2 weeks. But yeah, if you want to go safe conservative, there's nothing necessarily wrong with that. URTY compared to TNA, okay? Jan, a very fellow listener, constantly giving great advice here. 112.17. Looking for 2 weeks out. I'm trying to look for around 2% here. Okay, 105. 6% downside protection. You get 280 off it in 2 weeks. That's the bid. You might be able to get 300 on it. The delta's 0.31. Not too bad. I think they only do monthlies instead of TNA that does weeklies too. I guess I'm not sure if it's actually triple leveraged or not, but still has pretty good returns. Yeah, if you want to go a little bit safer and not have the leverage fund, URTI should be fine. Raj says, never use this website. Methodology of using it. Let's see if I could put it. I'm going to put it on the chat. m.stockoptionschannel.com. If you look at, Raj, if you look at any of my older videos, I use this website a lot. The main reason why I initially used this website is any brokerage, doesn't matter what you have, you could see these. And I don't have to show my account information if I open up Street Smart Edge on Schwab. So it's easy to find the numbers. So others that are giving these stock picks, you could easily just type in stock option channel, press the 3 dots, type in the symbol, and then you could find your information you need. So for instance, TNA, 7 days out. You could do covered calls for income if you already own the stock, or if you want to do a buy right strategy, you could buy 100 shares at the current price and then sell a covered call, usually higher than that price, so you could get some capital gains. Or you could also go cash secure put at a lower price and see if you just collect the premium. Essentially what it shows here is days till expiration. Strike percent from distance is how far away the strike is to the current price. It'll show the bid ask, and it shows the yield at the bid. So many times you can get a little higher than this. But this is just at the bid price, so you're pretty much guaranteed getting that, as long as the open interest is not 2 like it was for TNA about a month ago. But otherwise, you could usually get at least the bid. Usually try to get around the midpoint between bid and ask. If you don't get that, start going lower towards the bid. And then I typically look for 1% a week or 4% a month. This is a weekly. So 87 is paying the 1% because 87's bid price is 89. If you do the math on that, just take your $89 in premium receiving, divide it by the 87. You don't have to do 8,700, just do 87, and I'll tell you the percent. If you divide by 8,700, then you have to multiply by 100. It's pretty much the same thing anyway, right? And what's good about this, it does show the percent chance that it expires worthless. This is not probability of profit. It's essentially the delta. So the delta on this one was 100 minus 78 or 22. Notice when I do these option trades, I get my math in my head better without having to use the trusty, rusty calculator. But so 22% chance based on the delta that it'll expire worthless. Okay. Thanks everyone for the comments. If anyone wants me to check any other positions, now's a good time. And I'm going to show the scanner next for 1% weekly possibilities. If anyone's interested in the scanner settings, this is on Thinkorswim. You could go delta. I like 0.3 or less. Now, since we're selling options, you want to go negative on it. So negative 0.3 to negative 0.1. If you put a delta of negative like 0.001 or whatever, you might get some weird, really odd positions. So just have to, I like the delta of 10, so it might be a reasonable position. Days to expiration, I do between 3 and 7 just so I could actually run the scanner possibly midweek. So these are all for May 14th for next week. If you want to do monthlies, you could change this to 30-day expiration or 45. Return on risk, I'm looking for at least 1% a week. I cap it at 3% because if you do 8, 9%, you'll probably get stuff with earnings and high IV Chinese electric vehicles that are about to do a pharmaceutical company and run AI throughout the world and don't want the risk of that. Open interest 100 minimum, just so we have a little bit of people thinking about doing it. I don't put a max because it doesn't really affect it much. For the last price, this one you could easily change based on your preferences. I did max of 40, so 40 and under for strike prices because I like at least 8 to 10 positions at any one time. And based on my current funding, I can't really go much more than 40 if I'm not following my own advice there. Percent out of the money, I made one too. I started at 2% out of the money, which is relatively small. However, these are weeklies. So if it's a low IV, having to get 1% for the week and 2% out of the money, it could be a possible good example. Went all the way to 40. I don't want to go too extreme here either. If you try to make it like 80%, you might get these pharmaceutical companies trying to solve for a COVID vaccine while making a new electric battery in China, of course. I'm not trying to rail on any of those particular companies because they've made me a lot of money, but here is the scan that pops up. I did post a scan as a free Patreon, so if you want to, feel free to go to patreon.com/investingteacher. You don't even have to sign up for the Patreon for this one. It is already posted on the website, the scanner. Also, I do see some of you guys from the Option Wheel Facebook group, and I did post this. Did not post this one yet, but again, it's on the website there. A few little things I want to look for weeklies. Kodak seems like it always comes up. Kodak 6.5. Haven't actually ever traded it yet. 7.28, the 6.5, right here saying 0.77, but if you could get the last of like 0.06, 0.07, you'd technically get the 1%. A lot of these I haven't heard of. It might be earnings coming up. Oh, trustee Mara at 26. It's been a little while. Luckily with Mara, I did not get the big downturn. It seems like every time I purposely try to do Mara, it tanks like a rock. Or at least when I'm thinking about doing it. But every time I actually do it, it goes up like a rocket ship. It's at 31.33 right now. If you go to the 28, it's a little bit close to me. Oh, is it 28 or less? Mara 26. Yeah, that sounded right. 26 is paying a little over 1%. Delta's 0.2. Not a bad trade. If you want to, you are getting a decent cushion from 31 to 26. However, Mara could easily go below than that. So be willing to get assigned if needed and possibly sell your CCs. I'll talk about Apple shortly. If anyone else on the chat has any other ones you want me to look at, let me know. Mars and a few of these. Fubu, are they doing earnings soon, I think? Or they might have just did earnings. By the way, just Google Fubu earnings date. Or the name of the stock you want, earnings date. NASDAQ usually shows it right away. They reported it. Yes, Option Guru. Thanks for watching. Also, I did watch your video on the after earnings screener. That's really good stuff. I definitely want to take advantage of that one. I haven't heard that strategy before, so really good information you're giving out. And you guys that are in the chat, feel free to follow and subscribe to Option Guru. He's doing really good stuff out there. Here's Fubu. 1724. You go down to 14 in a week. That's a big downside. Delta 0.1. I mean, Fubu could do a lot of weird stuff, but it's paying good premiums still. So I would consider Fubu again. Earnings on Mara next week, Jen. I think you're right. Yes. Yeah, Jan, you were talking about that earlier. Maybe I'm back. I don't know. I just said disconnected. Yeah, don't touch Mara. It's not worth the risk, at least right now. I did trade earnings on RKT because I kept rolling and rolling and rolling. Like, who was that guy? Limp Bizkit or something? I don't know. Anyway, I didn't even talk about RKT yet. You're not trying to make me feel bad over the weekend. Essentially, I started the roll at the first one or two were good. Then this one, that was a good one. That was where the issue happened. I had two Kessier puts, 28.62. I went down to 24.39, and it drops like a falling knife on me, so I had to roll it. And then I kept rolling, and I kept rolling over and over until I got to the point where I essentially went into earnings this week on it. The earnings looked absolutely disastrous. They were 1 penny less than expected, and that destroyed the stock completely. And first last with RKT2. That looks like a fun summer ride. It was literally 1 penny under. And that was the earnings. I knew the earnings were there, but I was not willing to just take the hit on it. If I actually bought to close right here and got out of the position completely, it would have been about a 0.7, 0.8% loss. Not a huge loss, but I went with the flow. I didn't think it would necessarily go down that much, but it did. And now we're at the 18s. So that is going to be probably my most important position next week, because I am signed 200 shares. Cost basis on RKT is, I think it was around 21 and change. Yeah, 22, 21. Stock's at 18. This is going to take a while to go up. And if I go for cover call 22, I'll make not even a McDonald's value meal on it. I think we're looking at about $4-5 after the commission of 65 cents. I could afford the double cheeseburger and fries. Can't get a drink though. So I might have to go out further, probably about a month. If I go out a month at around 22, that's at least paying almost 2%, at least right now, with that theta decay of the weekend. it's going to not be 34 anymore. It's going to be 2 cents because that theta decay is so much. Lily Bird, sorry about that too. Yeah, it's a tough position, at least for now. Got to be very patient with this one. And ARC-AT, just because of this, is going to have me most likely with a negative month. If my other positions even do okay, I'm probably going to be slightly negative in the end, unless it could jump back up near low 20s. Apple, you guys mentioned Apple early. Sorry for the delay on that. AAPL. I have never owned Apple because it's 130.21. Eventually, when I'm a multimillionaire, Apple will definitely be on the radar like many other people I follow, which is nothing wrong with that. You do have to go very close to at the money if you want to get what I want, 1% a week or 4% a month. But if you're going close to at the money, it's still a good stock to own in the long term. If you want 1% at Apple right now for the week, you're looking at 129. Stock's at 130. So you're pretty much at the money if you want the 1%. I know a lot of people that have big accounts, they're not going for the home runs here. They might go for 0.5% or so. So they might go close to the 128, 127 range. So you have a little bit of downside protection there. You can still get about 0.5%. So more conservative play, I'd go around the 127. I didn't do any analysis on the technical side on this yet. But 127 is fine, conservative side. If you want to be slightly more on the aggressive side, or if you really like the stock and you just want to own Apple anyway and get a little money for it, just go for the 130. That's another thing that I know some beginners, one of the first things I usually mention for cash secure puts, if you like the stock anyway, why not get paid to wait a little bit? So again, the stock's at 131. You can sell a cash secure put at 130. It's going to cost you $13,000 to do it, but you're going to make $144. You could buy a share of Apple at the current price for quote unquote free, although it's not really free. You'd have to wait a week. What are the issues with it? Let me get to the camera side here. Yeah, my camera's doing weird stuff. What are some of the issues with doing an at-the-money cash secured put? The stock could go up to 200 and you don't get any of those gains except the 1% a week. Just imagine you're getting that 1% a week for every week of the year. It's over 52%. I don't even know where my eyes are looking right now. I'm just trying to look at the camera, but I don't even know which camera it is. So give me a second here. I'm going to go lower tech on here. There we go. So now at least I can see myself. Anyway, at the money, cash secure put for Apple, 130. You make 1%. If the stock stays pretty much where it is or slightly higher, nothing wrong with that. If you are liking the stock and you still want a higher gain, you could go right at 131. But if you want to get a pretty conservative 0.4, 0.5% a week, which still ends up being a good return in the end, go around 127, 126. So we're looking $3 to $4 under the current price. And most cases for Apple, they'll look like that at least before earning reports. So earning reports will have higher IV, and then you could go a little bit higher on it. Okay, June 17th, 23 for RKT. Yeah, that's definitely one I'll take a look at. Near 45 days out, that's probably where you'll have to go if your position went down quite a bit. And then, you know, take what you get on the premium side. Ideally, you get maybe 2% at most a month. That's what my goal is. Try to average 2% a month. So I don't know exactly what that pays off the top of my head. It's probably going to be very close to that. Because, Jan, you do your research well. January 20, June 17th, it's the 18th actually, for 23 covered call. Right now, looking at around Oh, I did cash secured put instead of covered calls because I'm so used to it. It's doing weird numbers right now. We're probably going to get 1.5%. So, yeah, something. But not the end of the world. Ideally, you like the 2%, but you're not going to be able to get it. 1% a week is pretty much equal to 52% a year, but it's slightly higher than that if you annualize it, assuming a lot of things like you're going to be able to reinvest every single dollar that you receive in the 1% gain, and you're going to do these trades every single week, and you're always going to be getting exactly 1%. But with all of that, we could figure out the approximate percent. Not really worth it in the end. I think it's in the 60s probably. Yes, that's the easy math. You would have to take compounding into account, which is going to change it. Let's see. Here's another trusty calculator. Money Chimp. The monkeys will help. This one does annual though. So it's not going to be the same, but start with $10,000. Don't put any extra in. Years to grow. Can you do 52 weeks? 1% interest? Does that make sense? I guess it's growing and it's going to compound every year. I'm not sure if that's right or not. It probably is. I'm trying to get rid of these ads, by the way. Anyway. We're looking at 16,776, so maybe 67% a year. I'm not sure if that's completely right. If anyone in the chat could help on that. But also, moneychimp.com does talk a lot about small cap value and why small cap value has good overall returns. TNA is essentially small cap value. It's more of a small cap blend, but it also is triple leveraged. And I wouldn't necessarily want to hold the small cap. I wouldn't want to hold a triple leveraged account for the rest of my life. I know some people are doing that. There's a sell puts guy on YouTube, and he does really high-tech videos of his phone actually videoing it. I don't know if I could find his channel and send it on the chat or not, but it's an interesting case. All he does is TQQQ, and he buys shares or sells close to at the money puts on TQQQ. Yeah, I don't remember where his thing is, but I'll find it later. Any other general questions in the chat? I have to find it on my phone, and I don't see where it is right now. So just give me a second on that. Google Chrome browser and uBlock Origin to get rid of ads. Thank you. Yeah, okay, I haven't heard that one yet either. Option Guru, keep bringing this stuff up. Good stuff. Any other general questions in the chat? Any other positions you want to look at? You could hang out a little bit more if you'd like. I think I'm going to be doing TNA pretty much weekly because the returns look good. You get 1% a week with downside protection. It's already an ETF, so it's already somewhat diversified. And I don't necessarily mind holding it, at least for the short term. The covered call side pays a lot more, by the way. So just real quick, if there's no other questions, I'll show what I was thinking with TNA. So 94.21 is the current price. I sold one at 80 and change. A little bit more than change, 85. The stock went up from that time. So you have to go to around 87 Still decent amount of downside. Yes, I know it's triple leveraged, but it's still 7% in a week. But here's the case that I'm thinking. Let's say that it goes down 10% and it's down to, so I'm going to show it here. So again, 87 cash your put pays 1%, 7.6% downside. Let's say it goes down 10% though. If it goes down 10%, you'll be at the 85, 84 range. So about 3 less. What if you go covered call right after that? Let's see, pretty close to what it would be if you were assigned right now at the 94. So let's say a week ago you sold a customer put around 97 or so, and it dropped down to 94. What if you sold a covered call at 97? Any ideas what type of guesses you think? 97, we are looking at 1.67% return on the covered call side in a week. And that's if it went down about 3-4% more than where your initial Kesker put was. Do I worry about getting blasted on a triple X leverage ETF? I mean, it could easily happen, of course. It could possibly go in a huge downturn for many months. But I'm not worried about it. Just got to live your life, right? 2020, you went from 74 to 11. Yeah, that's a bit rough, you know. I'm not going to lie. That's tough. And that was a month. But at the time, I was owning KBWI, which is a small cap REIT fund. It looks the same, 32 to 15. I mean, it's not as big of a drop. But I wasn't selling any Kesker puts on this thing either. Sell more puts then. Yes, of course. If you can. Lilybird is Spice 2 Consecutive. Is that the Virgin Galactic one, I think? I never actually traded it. Yep. Let's just look at the numbers on it. SPCE. Yeah, that stock moved a lot too. I remember when it was higher. Yeah. Let's climb the mountain and fall again. 1961. All right, 30 to 45 day. Let's look at 35 day. For some reason, it doesn't know the results found. It's paying a lot. Yeah, it's paying pretty good. Go to like 1650 or so for the 4%. So 19 to 16. Trying to look at the IV on that. Yeah, relatively high IV, 96. So, Lily, you could consider that one. So June 11th at 1650, maybe even 16. These numbers could change quite a bit because it's Friday night. Yes, Jan does mention this a lot, by the way. And it works for almost any position. Doesn't have to be a triple leverage. If you see the big crash, but you still like the stock long term, buy leaps at half the price, and then you let it hopefully come back up, or the implied volatility might come up. And even if the stock doesn't move much, your implied volatility spike will help the leap call. That one went down. It sure did. I'm just glad to see it again. It's like a, you know when they say it's like the 50-day moving average to the 100-day crosses into the MACD indicator. This is just a mountain, okay? Yeah, I can't say it any other way. No problem, William. Thanks for joining in. Any other last second questions or I'm going to probably watch Seinfeld or 24 or my fantasy basketball league that I'm in the finals in. I hope I win this. But that's more random than options. Any other last second questions, guys? If not, thanks for watching. Thanks for tuning in. Definitely appreciate all the support. And if you have any questions at any time, leave a comment. Any of my videos, I get those slightly pesky notifications anytime someone leaves a comment on any of my videos, even if it was a year ago. And I don't mind responding to them. If you've commented on things before, you'll notice I respond within an hour at most, and it's usually 5 minutes. The rocket ran out of fuel. Yes, it sure has. Maybe I'll do a fun rocket ship emoji meme Twitter thing. By the way, I do have Twitter. I don't really write much on it, but and at Investing Teach. Maybe I could get viral on a rocket ship emoji that shows it going down, crashing and burning like the SpaceX rocket, and I could get popular in the meme side to hopefully make up for that big loss. No problem, Raj, Lily. Thanks again for joining in. Again, any other questions, feel free to let me know. Oh, Galactic rocket. Well, Jan, the rocket ship is crashing too. What if you get Spice and Rocket to join together in delivering mortgages directly through a spaceship into your home, because Rocket will call you every second of the day anyway to bug you about refi? Do you have any view on Palantir? I'm sorry, yeah. I think someone mentioned Palantir before. Let me show what I did with it. It is in earnings season. It's very mountain-like too. Yeah, there's their mountain. The classic W-shape, the M-shaped pattern. My cost basis at this point is around 22 or so. I actually did the math on it. So I was 23.50 is my initial buy rate. I went down 369 on mine. So my cost basis is my birthday, 1981, per year. It's at 1975. I'm up a full 6 cents. 6 cents times 100 is $6 gain minus commissions. And I've been rolling and buying the close nonstop. I'm probably at a 55-cent gain by now. All right, what's my opinion on it? Very long term, I think they're going to be fine, and I'm actually pretty bullish on it. This is only one position that I have in my 4% a month strategy account. My wife has 300 shares in her account, and we go pretty far out. I currently have a 28 covered call on it. I wouldn't probably go into the earnings with it. If you currently own the stock, I'd probably wait until Thursday or Friday, until after earnings. Even though the IV will be lower, your premium will probably be lower. I'd wait if you own the shares. I didn't wait on it. I actually sold a covered call pretty far out though, to June 4th, and I'm still at my break even. So again, I'd wait if you have it. If you don't have it yet and you're considering casting your put, the premiums are going to be decent on it, but I wouldn't take the risk. It did move a lot down, so it might continue to go down. It might not. It might just level off even with decent earnings because it went down already so much. It's too hard to tell. I probably wouldn't touch it until after earnings. FCell. I think I did trade that before. 818. Whew. Yeah. 28 to 8. That's pretty rough. But let's see where we're at now. I don't do credit spreads at all. NT, sorry about that. I think they're too risky because you could get way too many positions on it. And then if you happen to be wrong, you could really get hurt. If you sell the 7, maybe get 6-7 cents for the week. I would probably go further out, maybe 20, 35 days. If you go out to 6, it's like 650 doesn't seem too bad. I mean, it already dropped so much, how much more could it drop? But that's what they said about Nikola and a lot of other companies. Much better than getting hammered by some people I know, me. Yeah, it happens to everybody. Lily, I got pretty hit hard on RKT too, so it happens. It's part of life. Just got to keep moving on. Not all trades will work out. Just keep on going. Yeah, I don't do any credit spreads. Do I trade any ETS for premium and E3? I did talk a lot about TNA. That I'll probably end up doing weeklies on. This is a triple leverage, so it could move pretty quickly. But 94 sold around 87. And you get 1% for it. 1% a week. Spreads are like picking up pennies in front of Steamroller Jan. I knew you were going to say that. I was just waiting for you to say it. It doesn't seem worth it. It does seem very tempting because you're like, instead of doing only one position at this price, you could sell 50 of them and you'll be making a small amount on the 50, but then the one time you're wrong, it could get really hurt. Last thing I'm going to check is my fantasy basketballs because it ties into options. I'm up 6-1 in the finals, biding my time because I'm the commissioner of the league. I'm not necessarily pro or against him, but the way this league works is you got to win 4 out of the 7 categories with actual players. And I'm up 6-1. However, he does have some players coming soon. Rebounds, I need to win. It's closer than it looks. Assists are kind of closer than it looks. Blocks, double-doubles, I'm good. So these are the 4 I'm trying to win. I don't think threes will hold because I'm going against Steph Curry. Points, maybe have a shot at it. And then tomorrow I get to pick up my last player. So I'm going to look through the free agency list to see. It's almost like option trades all over again. I'm just looking for players for certain categories and what they've did recently and who their opponents are and looking at implied volatility in their results. All right, I'm kidding, guys. It's been great. Thanks a lot for joining in. I don't see any more questions, so I'm going to stop the chat here. Thanks again, like always. Feel free to share with others that might be interested in stock trading. And again, I do a free Patreon for the month if you might be interested in that. You won't get charged until June 1st. Okay? Thanks a lot, guys. And thanks a lot for joining in. I'll see you guys next time.